Markets are falling hard, but if you've been watching daily market waves, you're not surprised. Welcome to Investing Angles, where every candle speaks, every Elliott wave reveals, and we chart the turn before the herd even blinks. Today's lineup is stacked. Volatility. Is it ready to orbit? US dollar. Double bottom or one more flush? TLT plunging and forecasted, while US yields align like clockwork. In commodities, silver hits our first target. What's next? Oil is falling. Want to know what the August 2022 candles told us? Exxon, Chevron, ConocoPhillips. Is there any hope? Let's dissect the Elliott Waves together. GDX Miners, a setup that not for the faint of heart. We'll also break down S&P 500 from multiple angles. Nasdaq, what are the waves whispering? Features of the day. BlackRock, 50% of the top. Let's explore. Boeing, cruising downward, as we forecasted months ago. FTSE, one of the most complex Elliott wave puzzles yet. Let's think it through together. And huge thanks to almost 14,000 our subscribers. We may hit the milestone today. Your support fuels every wave we chart. Got a ticker or index you want analyzed? Drop it in the comments. We just might do it live. And if you are hungry for real-time setups, Master Trader Kyle is dropping fire daily in our private Discord. Smash that like, subscribe, ring the bell, and let's dive into the market's next moves. And as usual, we start with Volatility Index. What does it telling us today? So the candles just closed, and the daily on the Volatility Index, technically it negated bearish odds for the daily frame. Even though that the index is grossly overbought, there is still a good chance that it will continue higher. However, we might be looking for another pullback just to normalize the indicators. And the volatility futures are clean bullish, very good chance to continue higher. If we look at the 12-hour frame, unfortunately there are no 2, 3, or 5-day frames closing today. What we are seeing here is a very good chance for moving higher. Even though the 12-hour closed as a potential reversal candle, it still needs to be confirmed. So far, the futures are looking bullish, as if they are considering moving higher. That's the volatility. Now let's have a look at the dollar index. The candles today are still not decided. There are still 2.5 hours to go, and the candle possibly can mitigate the bullish odds. However, it's not as strong as the confirmation was yesterday. So it looks like it is going to be neutral today. The same for the daily frame. Neutral, slightly bearish closure. If it closes like this, we would need to see another day or two until the direction is clear. So far, the dollar is neutral. Now let's move on to the yields, bonds, TLT, and the bond market overall. So yesterday's candles were quite clear. We are talking about reversal, and today's candle just confirmed it. We are seeing a very strong continuation candles on the 10, 20, and 30-year yields. 5 and 2 year are slightly behind, but I think they will catch it up. So this picture is bullish. We are expecting yields or rates to move higher. Speaking about slightly bigger formation, this is potential weekly frame for the 10-year yield. If it closes like this, it will be a plain reversal, bullish reversal on the strong bullish engulfing. The 2-day frame is also moving higher, and there is a very good chance it will close above the red line tomorrow, which would be a 400 days moving average. And I would like to emphasize how beautifully this bearish flag has been executed. Yields landed right in the middle of the target area, and now they are expecting to rally. Now let's have a look at the smaller picture. This is the flag that we were tracking for 20-year yield. Again, it was a very nice execution, hitting the target area. And if we look closely right now, it looks like a very nice impulse is being formed here. So we're seeing wave 1, 2, 3, and potentially 5. Let me make it more visible. So this is potentially an impulse of the bottom. So if we see the impulse like this, we would expect maybe a consolidation for a couple of days or maybe even weeks. And after that, we will see another wave upward. That's the perspective from Elliott Waves. Now let's have a look at TLT. Well, those who listened to us on Friday knew that what is coming. Technically, after a big formation, bearish formation, TLT is falling down, and it already is about, not yet, it's most likely it will happen tomorrow. It will be an 8 by 20 MA bearish cross, and the chances for moving lower will increase drastically. The 3-day frame closed today with the strongest, very strong bearish engulfing, and this nice chances to move further down. If the weekly frame closes like this, it will be a very strong confirmation reversal. So let's mark this area. It's 88.63. So it will be 88.63. If it closes below this level on Friday, this is 5-day frame, it will be closing on Monday. So if it closes on Monday, but let's have a look at the weekly frame here. So the weekly frame is 88.63, the same. Yeah, so this would be our confirmation of a top closure on Friday below 88.63. Just mark this level. And speaking about Elliott Waves, this is what we discussed yesterday, and I think that the picture fully materialized. So we can safely remove this purple count here, potential. We can see that it crossed the first target, 88.45, that we marked yesterday, and now we can say that this was an ending diagonal for wave C, and we are moving below 84.85. This is a very high probability move at this moment, and it might go even lower, but we will discuss it later on, most likely in our weekly update, when we will be looking at the bigger chart. So that's all for bonds market, and now let's move on to the commodities section. And today commodities will have silver. We'll discuss silver, oil, and a few oil stocks, and we'll also discuss the GDX ETF miners. Let's start with silver. So silver is falling down as we expected. No questions about it. This is the double top that we outlined in the middle of, I think, on April 3rd, in the middle of last week, saying that there is a very good chance to hit the first target, 31, and then move on towards 29. This is exactly what happened. Today is April 8th, and so far it looks like it's gonna be continued. If we look at the weekly frame, the weekly closed with a strong bearish scalping, very strong, and now as it moved very fast, I would expect maybe a few weeks of consolidation, like a horizontal move or even slightly upward, mostly staying below the 50 weeks moving average before the next wave starts. And the 10-day frame closes today in 1 hour 31 minutes. There is no chance, absolute no chance, that this is going to be a bullish or even neutral candle. So be prepared for another 10 days of bearish market at least. Now let's have a look at the perspectives. So this is the chart that we've been talking about, and we alerted on March 28th saying that the diagonal possibly complete and we can expect a move down when the silver was 34.11. Now it is sitting at 29.74, and this ending diagonal executed perfectly, broke through this level, and now we have most likely a completed double top or even a head and shoulders. If we look at this bigger formation, I'm talking about this particular one. This could be a head and shoulders, but we will measure it later on, and in our weekly update we'll see what would be the targets. So far these are 29.707 and the next one is 26.404 with this target which we indicated way back in March. So this is the picture perspective, and at this point I would like to say that the green count is most likely invalidated. We can remove it for now. It's no longer relevant at this in this notation. The blue count is quite questionable as well, so I'd like to remove this pass. We'll keep this potential C target for now, but my eyes are right now on the red count because of this very strong move down, very strong impulsive wave. And this is what this wave is about. So there is a good chance that this is potentially wave 4 and we would be looking for wave 5. Although there is also a possibility that this is wave 2, but I am not so sure about this. We still need to see how it ends. So that's the perspective closure here. Wave C, the red count, is less likely at this moment. If silver makes another lower low, which is very possible, then we would consider it as a bigger impulse, and this would be an impulse like this. Let me make some moves, some changes here. Adjust the channel. This would be the perspective channel for the impulse 1, 2, 3, 4, 5. However, if this wave extends, and we would be looking for potential wave 2 or B of a larger degree. That's also perspective right now. So I think the key move would be either making a new lower low. That's for silver. And now let's have a look at SLV Trust. So technically it's bearish on the daily frame, and I think that it finally lost its 200 days moving average by forming these 3 bearish candles under the red line. On the 3-day, it is falling down, ready to make a cross, 8 by 20 EMA, and the weekly is expected to form a strong bearish engulfing. And this beautiful chart that we shared with our subscribers back on April 2nd, just before the big move started. This was a call of April 2nd at 30.74. Since then, SLV lost over 12%, and the chances that it will continue in the same direction are fairly high. So far, it hit already the blue target, but I think that it will be heading towards the red one. That's the perspective for silver and the silver trust. And now let's talk about oil. So what is happening in the oil department? First of all, I would like to show you this chart. This chart was shared with our subscribers in August 2022. And it looked like this at the time. What we said that oil formed very rare 3 black crowds on the weekly frame. Oh, pardon, on the monthly frame. And there were only 2 similar counts, similar formations prior to that. It was in 2008, which led to 67% decline, and it was one in 2014 or 2015, which moved oil 50% down after this formation. So, and I was guessing what kind of impact it would be. So people said, no, it's not going to happen. So oil is scheduled to move to 150 or more. I said, well, candles rarely lie, especially at this frame. And now this is the same chart. This is the same chart that I kept for almost 3 years. What we are seeing here, that oil is slowly but surely moving down. So far, it lost after the event 34%. And if we take an average, 50 plus 67, average would be about 58. So if we look for an average move, although I admit this statistical sample is very insignificant from statistical perspective. However, it is what it is. We don't have anything else. And this would be an average move, average of these two. 58% loss, $36 per barrel. That's the perspective, just the candles, nothing else. Now let's move on to the next one. Oh, by the way, people don't trust candles, and something that I'd like to show you, it's another one. One of my friends in Canada asked me to evaluate one company. It's TELUS Corporation, so technically it's a Verizon type of company in the States of the same caliber, and this is what I'm seeing right now. So I'm afraid of showing this chart to him because what I'm seeing is brutal here. TELUS formed 3 black crowds on annual frame. I don't remember seeing this type of formation on annual frame by any company, but this is TELUS. What I'm seeing, just a plain estimate, very small, very quick estimate. I think that the company, after being at 34 in just year 2022, I think it has a very good chance to end somewhere between 14 and 8.5 in a couple of years. Maybe it will take wave B slightly longer, maybe a couple of years and bouncing here, but also a continued sharp move down as a zigzag for wave 2 is very possible. Okay, so that's just a quick update on something unrelated to oil. Let's get back to oil. So what is oil candles are telling us? First of all, I said that this candle was neutral yesterday and it would need a very strong confirmation in order to become a bullish one. So this didn't happen, and right now we are seeing a continued move down. Although the oil continues to be oversold on multiple frames and the risk of a reversal is still high. However, the odds are bearish on the 1-day frame and the 3-day frame, and obviously on the weekly. The weekly formed a very strong falling 3 methods, and we are seeing the consequences right now. Speaking about the smaller chart, what we are seeing here is this is an impulsive wave, and it looks like it is already completed because I charted it early in the morning with the potential for wave 2 here. It looks like wave 5 is on its way, and I would be looking for this particular formation. And we know that normally waves 5 in commodities could be longer than waves 1. So that would be somewhere here, and we can consider this as a wave 5, and this is the perspective outline for this wave. Once it's complete, we might see a pullback, a corrective pullback, something like this for wave 2. And well, but again, it wouldn't start until we see a very strong reversal candle, reversal signal. So far, we are not seeing any. Oil is continuing to move. However, it might be close to a reversal point. And if you are interested in a bigger picture, we will be discussing it later today in our daily update at investingangles.com. So that's oil, and once we are sitting with oil, let's talk about oil stocks. Exxon Mobil. We have these 3 charts here. So Exxon Mobil, Chevron, and ConocoPhillips. All of them closed today with strong bearish continuation candles. Even though they are oversold, there is no signal about reversal at this moment. And if we look at ExxonMobil, for example, for the bigger picture, we are seeing that 3-day frame is strongly bearish, closed today just 40 minutes ago. And if we look at the technicals for ExxonMobil, we can see this is the chart that I made on January 19th, and I didn't touch it since. So what is happening finally? We are seeing a MACD bearish cross here, and my very ballpark estimate based on some statistical analysis is that Exxon would be looking for about 44% drop from that level. And if we look at the bigger one, it will be about 50%. Potentially finding support at this red line, which is 200 or 2 months. It's 400 months moving average. That's the perspective, and I'd like to update the date. It's April 8th today. That's the technical perspective, quick technical sketch, and now let's have a look at the Elliott Waves. First of all, I'd like to say that after a potential impulse here, 1, 2, 3, 4, 5, Exxon formed a very sharp zigzag, ABC, for wave 2 of a higher degree, and right now it is falling for wave 3, but we can have a better view here on this chart. This chart that we shared was we've been tracking since May 2024, when we said that first of all Chevron will go higher and then it will move lower. And this is exactly what happened. We have a couple of interim charts. If you're interested, we can share them also. So what we are seeing here is that this is potential AB formation, and now we are looking for wave C. This is our immediate target, 91 to 102. It's already there, but this is also a possible target between 78 and 50. I'd like to mark them here, 78 and 50. So this would be a typical retrace for wave 2 after this huge impulse that started way back in March 2020. So that's the perspective. Let's see how it executes. So that's about oil and oil companies. Now let's move on to the GDX. GDX Miners ETF. What we are seeing is quite disturbing. So first of all, the daily frame is totally bearish. It had a chance, but as I said yesterday, this was a on neck candle, and today we are having a rejection, strong rejection, plus an 8x20 EMA bearish cross. The weekly last week closed very strong bearish engulfing. Today, this week, even if it closes with a green candle like this, it will be bearish. And the 8-day frame closed yesterday with a strong bearish engulfing. So the momentum is increasing, bearish momentum is increasing. And if we look at the charts, this is quite a concerning one. And this one I haven't updated since January 4th, 2025, and perhaps it's time to update the timestamp. So we are seeing, and let's do it together. So this is the chart that I shared back in November 9, 2024, saying that GDX formed an ending diagonal, and it could be either wave 3 of a bigger impulse or wave C of a correction. And we were looking for the move here towards 32, and then it would be a decision here either to continue higher or to move lower. So what happened with GDX? It indeed moved towards this target, to the blue line. And however, it made a very significant mistake. So it overlapped wave 1 and 4. And from Elliott Wave perspective, it's just an ending diagonal. So let's do some cleanup here. So first of all, we will remove this unnecessary elements, and let's see what happens. So this is ABC is no longer valid here. We will remove these ones, and this is also not relevant anymore. And this is what we are seeing right now. This is a very clean ending diagonal for GDX Miners, sitting at the level of origin 2152, which it made in September 2022. So what I'm saying right now, that this is a very good chance for GDX Miners to move down and lose everything here up to 2152. And this would be a 54% drop. All right, so that's the perspective. This is what we are seeing here, and let's see how it is going to be executed. Well, that's the perspective for GDX. Now let's move on to our S&P 500, and let's talk about the indices. So what we are seeing is very strong bearish closure today after technically bearish continuation candles that I discussed yesterday in neck or on neck. All four indices rejected potential move up, and right now they will be looking for a move down. This is on the daily frame. If we look at the 3-day frame, which also closed today, I would say it's also bearish. No signal about reversal on this frame, and the odds are elevating. I would say that all indices right now are strongly oversold, but we are not seeing any reversal signal. So we might just assume that it will continue to go down. Now, if we look at this potential wave that we charted way back in, we started tracking it since December, saying that this was an ending diagonal, one of them, and then it was another one, and this is what we did in March 10. So now S&P 500 hit its target 5120, and what I'm seeing right now is the potential for expanding this wave. And instead of the original one, I would be looking for this potential wave 1, 2, wave 3 would be here. Potentially it's getting close to the end of it. Then we will see a bounce and then another move down towards 45, 4300. That's the potential move. And I would like to say that because of strong oversold, there is a very good chance that we might see a bottom of wave 3 and we could see a jump over towards wave 4 and then wave 5. At the micro level, we will discuss the perspective in our daily report later on, probably closer to the night, once we have more information, more data from the futures. Now let's move on to this one. Yeah, this is the short term that we discussed yesterday, and it looks like it was this particular structure, A, B, and wave C, potentially very sharp wave B, and possibly an ending diagonal for wave C. Now we are seeing wave moving down. If it makes another lower low, then we might see a strong bounce in an impulsive fashion. If we look at the sectors, all sectors today closed with bearish candles. There is nothing bullish in this picture. We might see a very unexpected bounce tomorrow, but at this point, the odds on the daily frames are bearish. The same we can say about large caps. Microsoft, Amazon, Apple all formed strong bearish continuation candles. As I promised, Google formed a 50 by 200 days moving average cross, joining in this department Amazon, Microsoft, Apple, and the Tesla is pretty much on track for making the same cross. Now, if we look at Nasdaq and compare it with S&P 500, technically it's somewhat similar formation, what we're seeing here. So this build up here is most likely wave 4 of wave 5. And if it moves a little lower, it will make wave 3, and then we will be looking for wave 4 and wave 5 down here. However, it's also a possibility that this would be a wave C of A. And I am keeping two different counts, purple and red one, for this perspective, even though they're very similar, just semantics for this one. And this chart that we've been tracking since February, when we started here saying that this was our original print on February 22nd, when we said that there is a very good chance Nasdaq falls towards 19,600, and right now it's, well, 1,600. So no surprises here, slightly overshot. Well, that's the perspective for now. I can remove this target, and this is the perspective for an impulsive wave like this. Could be wave 1, 2, 3, wave 4, and slightly lower would be wave 5. And this would be for the blue count. Something like this. Well, that's the perspective for Nasdaq, and let's move to the very interesting and the most interesting, I would say, part of our conversation today is special features, and we start with BlackRock. So what we are seeing here is the very long-term chart, something that we discussed early in March with our subscribers when BlackRock was about $1,000 per share. Right now it's already 815. And we said that at the time that it has a very good chance to fall towards 670 or 530 or 540 because it formed an ending diagonal here. And what I'm seeing right now, that this move here, it made another overlap here, important overlap with this wave. So now it's gonna be either completion of this potential diagonal, or it could be a bigger diagonal, something like this, for example, something like this. So this would be another potential ending diagonal with a higher high here. However, both of them will end up here at this level. This is the level of origin of the diagonal, and it is, just to be precise, 503.12. Let's put it here. So this is 503.12. This is where I would be looking for a return for this move. Sooner or later, BlackRock is expected to move here. In general, it will be a 50%, even more, 53% loss of the top. Now let's have a look at the other points, data points. So the daily frame is bearish. It negated the candle of yesterday and is moving down. As you can see, 50 over 200 death cross is looming, and probably we'll see it in a couple of days. What is another scary moment here is BlackRock is closing, making a MACD cross on the monthly scale. And right now, if it is aligned statistically with the previous one, it will be a strong move down. Like two previous crosses led to 44% loss, 48% loss. This would be somewhat aligned. And it would also align with our estimate based on Elliott Waves. This was our call, like a very recent call on February 12th, when BlackRock was 973. We said that's a double top. Be prepared for this particular target, 903, 814. So far, that's a beautiful execution. Nothing to complain. And speaking about this candle, this chart, it's technically a micro chart that we discussed with our subscribers way back on May 10th, 2024, saying that BlackRock has a beautiful path upward, and after that we were not so sure. So it hit the target perfectly, adding 35% to its value, and right now it is moving down. And I would like to say that this particular cross today, it was very important because it crossed this particular level, making this formation an ending diagonal. Well, whether it goes higher or continues to move lower, the end of it is going to be here. This is something that we already discussed. It's going to be 503.12. So this would be our perspective target for BlackRock, even though it doesn't sound very assuring, but it is what it is based on Elliott Waves. Now let's move on to the next chart, and this is Boeing. A very short update here. Boeing is on track towards this target. We made a call on December 24th, 2023, when Boeing was 260. And this was just a few days before this famous incident in the air when the falling door and something happened. This was our chart then. We said that this is going to be a target somewhere between 100 and 110 and 50. So this is the chart remains the same. Based on the candles, we are seeing that Boeing has lost its monthly moving 200 months moving average, and on a daily frame, on the weekly frame, it's strongly bearish. Based on the 3 months or a quarterly formation, this is the estimate of the targets right now, with 104 being a middle point. Let's see how it closes here. Maybe it will find support at the 200 quarter moving average. So far, Boeing is bearish. And the final one that I would like to discuss today is FTSE. So this is the chart that we made back in July 7, 2024, when we finalized it and said that the UK index has some room here to move higher, and then it will be moving lower. But this is a very complex chart, and I still have no certainty about it. So let me just share what I think about it, and I would be open to hear your opinions, your ideas. So first of all, this is the first wave here is clearly impulsive and it lasted until February 2000. After that, it was lots of overlaps here. And there are two main scenarios that I was able to identify. First of all, the next, let's say this was the wave 2. Let's talk about the red scenario. Wave 1 of a cycle, wave 2, and now we are looking for another cycle. However, this wave, I marked it here, 1 of 3, because some people suggest this might be wave 3. I said, no way, it's not possible, because wave 3, by definition, by Elliott Wave rules, cannot be an ending diagonal, or cannot be a diagonal at all. So this must be wave 1 of 3, which is possible. Wave 1 can be a diagonal. So in our case, then it would be 1, 2, 3, 4, and 5. And we know what we know about ending diagonals or leading diagonals. In our case, that they tend to return to the level of origin. In our case, this would be, so I haven't adjusted this since, so let's move it here. So this was potentially wave 2. Then our target for this diagonal for wave 2 of 3 would be somewhere here. And I would say probably even lower, 0.5 at least decline, 50%, and to the maximum to this level, to the level of February 2003. However, without crossing it. So this would be the target for wave 2. And another possibility here is that this whole wave has been a corrective wave B. So this was a complex wave A, B, C. For wave A, a bigger, as the first wave of the correction. Then we will be looking for wave A, B, and C. Here, I think I need to add C just to make it slightly clear for the counts. So this would be count C here, and this would be count C also. So here. So once we have an ABC, then we would be looking for wave C. And based on the estimates, I would be pushing this a little higher here. This would be our perspective target for wave C. So as you can see, both wave 2 and C potential overlap. And the only difference between them that wave 2 would be a corrective wave and wave C would be an impulsive wave. This is something that we need to look at, and right now wave is still, it's a huge wave. It's still doing the first move down, and once we have a pull back, then once we have a bounce, then we would be able to identify and to say what kind of wave it's gonna be, whether it's likely wave 2 or C. However, I would like to say that both these counts are fairly significant, target for very significant losses here. So this would be the perspective target for wave C, and this would be for wave 2. Well, this is something that we expect for the index. Let's see how it executes. At this point, we are seeing very strong move down. And if we look at the candles, the daily candles are strongly bearish. The weekly is bearish and flipped the 8x20 EMA bearish EMA lines, made a fresh bear cross on MACD on the monthly frame, and I would say that on the 2 months frame, which is a very rare, it is also looming. If it makes it by the end of April, it will be a very strong one, and I will run a statistical piece just to estimate what we should expect from FTSE index. Well, that's been quite a discussion for today. Let's wrap it up. From volatility vertical climb to silver precision drop, from oil's prophetic candles to BlackRock's looming correction, today wasn't just another red day. It was the next chapter in a narrative we've been writing for months. S&P 500, Nasdaq, Commodities, Energy, and FTSE, each one sending signals. Where are you watching? What's your top setup for the next 72 hours? Drop your ideas in the comments. Let's chart it together. For full Elliott Waves charts, statistical setups, and multi-frame candle analysis, head to investingangles.com. Want to be ahead of the headlines? Join our private Discord where Master Trader Kyle and the team post real-time, high-conviction setups before the market reacts. Like, subscribe, and share this with your trading crew. Don't let them miss the next reversal. Until next time, stay sharp, stay objective, and remember, at Investing Angles, we chart the turn before the herd even blinks.